Last week I did a video on gold explaining how I got over 47,000 pips trading gold using a very simple entry model: breakout structure, inducement, and point of interest (POI). Right? So in this video again, I'm going to be explaining a little bit of that entry model and then showing you how I use that same entry model to get over 1,000 pips trading GBPNZD. Alright, so if you're just coming across my channel for the first time, do well to like, share, and subscribe to the YouTube channel to learn more trading stuff. Alright, so let's dive into the video. Now, what I look for whenever I'm about to trade, no matter the time frame I'm trading from, are just three simple things: breakout structure, inducement, and POI. Right? A breakout structure will be indicating the direction of the market, right? So whether the market is trending or not, I want to make sure that I follow the trend whenever I'm trading. I trade alongside with the trend. Don't forget, the trend is your friend. All right, so breakout structure will be indicating where the market is going to. All right, whether it's a breakout structure to the upside, which is indicating an uptrend, or a breakout structure to the downside, which will be indicating a downtrend. All right, and we also have a situation where the market is breaking structures both to the upside and to the downside. Right, I want to be outside that kind of market situation. If the market is breaking structures to the upside and to the downside at the same time, then that will mean a ranging market. All right, and as a swing trader, you want to stay out of that kind of market condition. All right, so I only focus on trending market. When the market is trending, that's the market you will see me. So market breakout structure to the upside will be indicating uptrend, and breakout structure to the downside will be indicating downtrend. The second thing I look for when I see my breakout structure is inducement. Inducement is simply a trap, right? It's a form of liquidity. It's a trap, right? So what I use as inducement is after a breakout structure to a particular direction, be it the upside, like in this case, the first pullback is actually what I take as my inducement. All right, the first pullback is my inducement. So in this case, market broke structure to the upside and then gave us a first pullback. Now this first pullback must at least be about 50% of the range, right? So what that means is that from this low to this high, newly created high right here, right, the pullback must be at least 50% of that range, right? And sometimes the pullback might end up breaking structure again, sometimes it might not, but in any of the cases, the first pullback remains my inducement. The same thing applicable to market breaking structure to the downside. You see that there is a breakout structure to the downside. The first pullback, right, serves as my inducement. Like you can clearly see, market break structure to the downside. Now this first pullback becomes my inducement, and I say don't forget, the first pullback must be at least 50% of the range. That means from this high to this low, the pullback must at least be 50% of that range, if not at least close to 50% or even more than 50%. All right, so that's what I take as my inducement. The next thing I look for is my point of interest, what we normally call POI, point of interest, right? So depending on the market structure and what I see on the chart, I pick any point of interest that is closer to my inducement. So I have these three types of POI. I have a breaker block, I have double imbalance, and I have an order block. Any of the POIs I'm using, I want to make sure that it is the one that is closest to my inducement. right? So what I mean by that is that if in this case I was to have a breaker block right here, this is my inducement, and I have an order block just below it, right? The POI I'm going to make use of is going to be the one that is closer to my inducement. Don't forget, this low right here is my inducement, and if I'm going to make use of a POI that is closer to it, it will definitely be this breaker block right there. So that is where I'm going to place my trade. Oh, sorry, this is a buy. So I will place my trade right there, and as you can see, all right, so instead of using the order block, I make use of the breaker block because that's what is closest to my inducement, and you will find out that market will most of the time come to tap you in from that breaker block, right? But in a case where the first pullback, which is supposed to be our inducement, has already tapped into that breaker block, the breaker block becomes invalid for you to use. So that's the only situation where you can make use of your order block to trade from, right? Target the nearest high, and then you find out that market will come and tap you in from that order block. You cannot make use of an already mitigated breaker block. You can't make use of, because the first pullback acting as our inducement has already mitigated on that POI, right? So you make use of the next available POI. So that is the only case I don't make use of a certain POI, like if they are already mitigated or if they are too far away from the inducement. All right, so those are the only two reasons why I will not pick a particular POI. All right, so let me show you how I use this simple entry model, break of structure, inducement, and POI to get over 1,000 pips trading GBPNZD. So this is GBPNZD, and if you have watched the previous video I did on gold, you would know that I'm a swing trader and I love to hold my trade for long. And of course, as a swing trader, I start my analysis from the higher time frame. That is the monthly and the weekly time frame. Most of the time, just the weekly time frame, and I'm good to go, right? And in this case, you can clearly see that on GBPNZD, we are on the weekly time frame, as you can clearly see. What I first saw on the chart was that market was heavily bullish already, and if you look to the left, you will see that market created a supply zone right here. Right after this sweep, market created a zone, so that's the supply zone, right? And you draw that out. Close to that supply zone, you could see a buy to sell, so I took that into consideration too. All right, and then extending my supply zone to the right, so you can clearly see that the market is trending to the upside and possibly coming to this supply zone, right? As long as market has not yet come into this supply zone, we can still be looking for buys, right? As I'm starting this analysis, I'm starting from the exact point I started looking at GBPNZD, right? So from the weekly time frame, I saw that market was making multiple break of structures to the upside. Break of structure, you could see that there were multiple break of structures to the upside, right? Indicating that market is heavily bullish. And if you draw your trend line, you can use your trend line to confirm that okay, market is already bullish. All right, so we scale to the daily time frame, and on the daily time frame, you could see that after this break of structure, market gave us a pullback before breaking structure again. Let me show you what I'm talking about. You can see that there is a break of structure, and then market gives us this pullback before breaking structure again, all right, creating this high right here, all right, acting as a swing high. All right, so you see clearly that after this break of structure, market gave us a pullback and then breaking structure again to the upside. This is the daily time frame, don't forget. So that first pullback that the market created becomes our inducement right there. Let me map that out. All right, this low becomes our inducement. All right, if we were to make use of an order block, we would have used this area right here, that is demand zone, right? But of course in this case, you could say that market was reacting from this breaker block, this breaker block right here, and you could also see that that was the POI that was closest to this inducement. Don't forget, we are on the daily time frame, right? So already market was reacting from that breaker block. All right, so it was time to look for a possible area to enter the trade from, and then target this high, then this high, then we can look forward to coming into this weekly supply zone. So I scaled to the 4 hours, and on the 4 hours you could see that market reacted from that daily breaker block after sweeping this inducement. You could see market reacting from that daily breaker block right there, and then breaking structure again to the upside. All right, now market did not kind of print out an inducement, but was gradually coming to the downside, and of course mitigated this other block right here. So market was reacting on this daily breaker block, right, and then changed character, come back and mitigated on this other block right here. And then again you could see that after market tap into that other block, you could see that there was a change of character. Market broke structure again to the upside. All right, so this was a break of structure, also acting as a change of character. All right, a change of character on the 4 hours, and I don't go below 4 hours. I look for my entry on the 4 hours time frame. All right, so clearly you could see that there is a break of structure after market mitigated on this other block. It changed character, a break of structure acting as a change of character also. But this is just one of the things I look for, a break of structure, and I've seen a break of structure. So I have to wait for market to print out inducement before I can now look for my point of interest, the one I can use. All right, so let's see what market did at this point. Now after a break of structure, you could see that market made this little pullback right here. All right, but of course this is not the kind of pullback I want to see, so I just ignored it because this pullback is not up to 50%. It's not even close to 50%, so I ignored it. I didn't take it as a pullback. Let's see what happened. Okay, so now you could clearly see that there was a break of structure. There was a break of structure to the upside, and then the whole movement right here is what I take as a pullback, right? So a break of structure, and then this all push the downside, because this is clearly the type of pullback I want to see. Is is 50, is even more than 50%, right? So I took that low to be my inducement right there. All right, and let me map that out. So that low becomes my inducement, right? A nice one. And then this is the newly created high on these 4 hours. All right, so let's see what market did. All right, this is a decent pullback for me, because of course maybe we are not breaking this high, so this will act as my inducement, and I will pick a zone. In this case, if I was to pick a double imbalance, you could see that right there the double imbalance was already mitigated, right? That imbalance was already mitigated, right? Imbalance from here and imbalance from here. That imbalance was already mitigated, so I ignored that and I just make use of my order block right here. So I map my order block out and, you know, place my order right there, covering this low right there. And don't forget, I don't place limit orders. I just place these orders on trading view and then set an alarm. All right, so that's what I did. Enter there, and then of course if we are breaking this high, we are going to target this other high right here, right? This other high right here. So this is what I had, and let's see what happened. Now you could see that market created equal lows at this point. All right, and as SMC student, you of course know equal lows has been, you know, type of liquidity. So that could tell you that these lows will definitely going to be swept, right? And below it is just another block right there where I place my trade, right? So let's see what happened right there. Okay, we got triggered in. Alright, so that is it. Breaking this high is going to indicate that we are going to target this high and then this high, right? So at least this is the high we should be looking at. And don't forget, on the daily time frame, you could see that weekly supply zone above it. All right, so we break this high and then this high is not going to be left behind, right? If we are going to come into this weekly supply zone. So let's see. Okay, we broke that high, indicating that we are bullish, and then we are good to go, right? I still got another entry at the top, but there will be no need for that. That is simply how I use this simple entry model, break of structure, liquidity, and POI to get this trade over 1:12, and then the trade is still on, but I've closed most of the trade and just allow the remaining one to keep going. Alright, so that is all for this video. See you guys in the next video. Do well to like, share and subscribe for more videos like this. Peace.